the afternoon of, yeah, I'm recording now, yeah. It's the afternoon of May 4th, 2015. Let's go over ZB 30-year bonds, and then I'm going to show you a trade I did on the ZN, which is the 10-year bonds, 10-year notes. Anyway, we started off this morning right around 4 o'clock. Had a great down signal, and it was kind of corresponding to the downtrend from last Friday. So I really liked it, and I took that and right down here to the pivot. Had good profit. And we had a long signal, which I didn't take, and then a short signal, which I was about to take because, again, it was going with the trend. And remember, this is a 10-minute chart, but I'm looking at the 30-minute and the hour too to try to see if I can find a little longer trend. But I was about to take this guy, and then my rules say I after the signal fires, I try to get in on the next bar. Well, then the next bar fires this long signal, so I just stop. And I have all three of these signals here together. That tells me to back away, especially if they're one bar apart. I typically don't like to take another trade until I get, 5 or more bars away. In other words, if this would have fired, this fires long and then it goes up 4, 5, 6 bars and then fires short, then I'd take that trade. But in this particular instance, I just back away. And this guy just bounces right off the pivot here and runs up, which was a good trade. Then it starts chopping around here, and then the short signal comes in. Now this is where I didn't take this trade because it kind of ran away from me, but I took one on ZN, the 10-year. I'm going to drag that chart over here if I can. And I want to show you something real quick too, if it'll let me. See, here's the 4 o'clock. These 10-year notes and 30-year bonds will kind of follow each other, but sometimes they don't. And here's a perfect example. Here's the short signal that happened on the 10-year. Here's the short signal over here on the left-hand screen that happened on the 30-year. And you see it came down, it ran through its pivot, and then it kind of chopped around where in the 30-year we were getting all these conflicting signals. And then we get a nice clear long signal here. So if I'd have been watching this chart, then I would have taken this. So I started kind of watching this chart some. I'm going to go ahead and drag it on over. And I took the short signal on the 10-year, which turned out to be a fantastic trade. Look, it runs right down to the pivot, pierces it just a little, and then recovers a tad. But my point is, if one of these bond futures isn't working or the signals are funny, then maybe look at the 10-year. There's even a 5-year, but I don't want to trade that. Now on the ZN, the dollar per tick is cut in half. So you got 31.25 divided by 2 is 15.62, and so that's what the tick value is on this 10-year. So your risk is cut in half as well. But I've been watching this guy more and more, and in my trading time range, there seems to be some good signals on it. There's a lot more volume. There's probably 2 to 3 times the volume in the 10-year versus the 30-year. So that's interesting. But I'm going to be watching this ZN futures contract, 10-year contract more and more. And you'll probably see some more trades on that from me in these videos. But anyway, it was a great profitable day trading the two different contracts. Anyway, good start of the week. Let's keep it up. Let's keep going through the rest of the week and finish out Friday strong. Anyway, that's what I've got for you, and I will see you later. Thanks.